Good morning, Essentials Room. Hope you can hear me okay. So, just to let you know, a couple of things I'm watching in this market. Number one, I hope you realize that there's a time and a place to buy on the way down, and this isn't one of them. Now, you might be able to. Now, let me just clarify that. I'm talking about swing trades like for a day, for a week. But some of the most money I've made is actually buying in bear markets because the rallies are so spectacular. So whether stock's a bear market, bull market, there's always shorts, there's always longs. So don't get discouraged about that part. But you need to identify the trend, like here, or like here, or like here, that you can't just buy on the way down. There's a time and a place to play these stocks on the way down. And like I said, if you want to have a extremely short time frame, yeah, you could play them. But I'm talking about if you're buying for like your IRA or something, you've got to identify the trend. So I can't stress that enough. The other thing I thought I'd explain in here is how bad a trade is the ultra ETFs over a period of time. You have to understand that the multiple ETFs, 2 times or 3 times, are designed to have slippage. And in the long run, you're going to lose money. Let me show you what we're talking about. This is the UVXY in the last 10 years. Yep, it was 3 billion. 3 billion. It's now 35. It's had like 8 million reverse splits because it's designed to go lower. So all you have to do in here is take something like an SQQQ and on the right a TQQQ. So if you think there's not slippage, then theoretically over the course of years, it should be a push. So it should be a push. So what do I mean by that? That this and this should come out to even if you shorted one and bought one, or bought one and bought one. But as you see, since 2023, the TQQQ is unchanged and the SQQQ is down 80%. Yeah, that's a big, big eye opener, isn't it? Big eye opener about slippage. So if you bought both of these in 2023 at the beginning of the year, so let's just take the beginning of the year. So this was 230, the beginning of the year. Like I said, if you don't think there's slippage, then these should be equal after 2 years. So where was 2023, the beginning of the year? It was, survey says, right here. There you go. So as you see, that's up. This is down a ton. So I'm just telling you that inverse things are not the way to go. I mean, triple or double, unless you just play them short term. I just can't stress that enough. It's a big, big, it's not the way to go. So remember, we're not trying to be the public. We're trying to be the house, which means to sell premium to establish positions, or you look for identifiable chart patterns. That's it. So let me show you some of the stuff we're talking about. Number one, and everybody asks this, how do you identify the trend? Well, I'll show you. There are a lot of ways. I mean, it seems like every content provider has a different way to identify the trend. But I use a 50 moving average. That's what hedge funds use. That's what funds use. And go and take tests on a daily chart. That sure looks like a downtrend to me. Just because it gets over or under it does not mean to automatically do something in it. So a lot on Stock Twitch, I publish a lot there, say, oh, do you buy when it automatically gets over it or sell when it gets under it? No, there's a lot more involved. But what it does mean, if you get under the ATR trailing stop, it means, and the moving average, that bearish patterns are more likely to work. It's all about probability. So like here, you might say, oh, I got I got whipped out 8 million times. Well, you're going to see that when it gets over something, when you get stopped out, let's say you buy on the ATR trailing stop, forget about down here, the MACD. If you did it like an algorithm and you bought on the way over this and got stopped there, you actually still made money. If you bought when it got over it here, you made a boatload of money. If you shorted here, guess what? You wouldn't have gotten out till here. The point is, if you want to try to be like an algorithm, at least when you're wrong, you're going to lose very little because you're already sort of going with the trend. You can take that on a 5-minute, you'll see the same thing. I hope everybody sees this. If I take off everything except the ATR trailing stop, what happens? You short here, you get stopped here. You buy here, you get stopped here. This is a 5-minute. You buy here, you get stopped here. You buy here, you get stopped here. The moral of the story, when you're stopped, you're breaking even. That's an amazing thing. So at least if you're going to initiate, try to do it like an algorithm. This way, if you're buying above it, you sell when you get below it. And you'll see your track record maybe is 50-50, but when you're right, you're going to make a boatload more than when you're wrong. Now, if you buy on the way down, you're smoked. So I just want to make that clear. If you want to do it like an algorithm, totally understand. So let's go into the NASDAQ on a 5-minute chart. Now, the problem right now is you have so much, tape bombs. We call them tape bombs. So a tape bomb is right now is Trump saying something good. So yesterday you had a tape bomb from Powell saying something bad. So what do you see in here? Well, believe it or not, the same thing. If you bought here, you're stopped here. If you shorted here, you're stopped here. If you bought here, you're stopped here. Very little losses when you're wrong. Very big gains when you're right. So if you want to do it like an algorithm, by all means, because algorithms are extremely simplistic. I just can't stress that enough. They're extremely simplistic. So some of them are moving averages. Some of them are ATR trailing stops. And if you want to do it like an algorithm, that's fine. Just keep in mind that one time frame higher I use a lot. So if something's over a time frame on a 15-minute, then bullish ATR trailing stops on a 5-minute are more likely to work. Like I said, the ATR trailing stops an art, not a science. I've been using it for 30 years. I would listen to me on it. So, it's an art, but our way we do it works pretty damn well. So the other thing, and I wanted to go over this also, somebody said yesterday they could only buy calls. Well, I'm telling you right now, if you have that, the only time you can buy premium in an inverse ETF or in, let's say, the NASDAQ, on the long side in a downtrend is to shorten your time frame and wait for your pitch. That's your pitch. So what do I mean by that? And we showed this earlier, and I showed it on Stock Twits. If you're not following me on Stock Twits, I have a lot of followers, like 57,000. And mainly because I've been right a lot. But it's really more that I'm showing good content. I'm not bragging. In fact, if you go through this, I bet if you look at my last 500 posts, I've bragged probably 5 times. So one brag for all 100 content. I don't brag. I let my clients do that. But there you go. That's what I teach. When you get overbought, look on how it works off the overbought. Does it work it off by retaining a bullish structure? That's what you're looking for if you're going to buy a call. So if you're going to buy a call, though, you can't buy a out of the money call for today because you have bump up against resistance. That is not that big a move. If you buy premium, you're going to lose. If you buy in the money premium, Sure, you can make. I mean, in the money options. One of the biggest losing is buying out of the money premium. If you go to JC's book, what's he talk about? 70 to 80 delta premium on an option. If he picks direction, which he picks right a ton, you don't want the time premium to decay on you. And I'll show you a perfect example. Go and take today the SPX. I see more people buy out of the money stuff. Now, when does out of the money work? Well, it'll work if there's no resistance overhead and if you're in an uptrend. If you see this right here, you're in an uptrend identified by the 50. Sure, you could buy out of the money, but still, it's a depleting commodity. But let me just show you for today. We're going to take a 1-minute chart. So we know the ES net is up today. There's a perfect way to look at it. So today, we're just going to erase the drawings and we're going to take from the opening, which is right here. So the SPX is up about 20 for the day. So 17. So it's up 17. So I'm going to take you to the SPX and I'm going to take you to the 5350 call for today. But I'm going to take it from yesterday. I'll show you. So we're going to take this. I'm going to copy this. And I want to show you what happens with time premium and how the public buys premium and the public in the long run loses money. All right, see these? To show you. So here's the 5350s. I'm going to put it on a 5-minute chart. We're going to take off pre-market. Now, it does trade pre-market, but not for most normal people. Trades on interactive brokers. That's about it. There. This is what I want to show you. So we're going to go and take this. So what are you going to see? You're going to see that the 5350 calls yesterday. Where'd they close? They closed at 13. 13. Where did they open today? 10. Where did the SPX open? Up 20. So do you want to be on the side of the public or the house? So you're telling me that if you came in and the SPX opened up $20, wouldn't you think you'd be sitting high? Nope, you would have lost 50%. So right now, the S&P is at the same place it was this morning. Close. Right here, these were 10. They're now 2. So like I said, if you bet on going up, bet in selling out of the money premium in the direction you think it's going. 5350 calls have lost 90%. Okay, let's take the 5150 puts. It's a better way to play it. What have they done? Yep. Well, they closed at 10 and now they're 70 cents. Isn't that amazing? In fact, when the market took a dive, they only went to 2. So when the market opened here, check this out. And then, so right there, they opened at 2. This sold off 30 points and they were unchanged. I'm telling you, you want to use premium to your advantage. I can't stress enough that staying in this business in the long term is the way to do it. So in there. Tesla, I'm just not trading today. I want bigger things in here. These are the ones I'm trading. Tesla in a big downtrend. So I'm just not showing Tesla. So too many news-related events. I'd rather show these and they're bigger. Netflix has earnings tonight. But that's why I did it, because I'm not trading Tesla today. So, and I'm using these as tells. Tesla's a mind of its own. It's not helping with direction. So that's why I'm doing it that way. Now, like I said, premium is the way to go. Now, you might say, well, why don't you sell some call premium? The market's down, just staying in the dumps, because you worry about tape bombs. It really screws up my trading when I want to sell premium in the direction I think the market's going, but I worry about something coming out. So usually we're picking our spots and we're doing fine in it. And I'm just going to continue to stay that way. And the other thing in the chart patterns mastery, I get on early. There's so many people that don't take the homework, don't take the hard work and come in 30 minutes early. We go over our strategy of what to trade. And when we go over the strategy, we talk about the high percentage and the low percentage. And some we might do like a one lot to try it. But you got to be in here to know the explanations. So, keep that in mind. Now, what do I think of the broad market? Well, let me just go over what I think overall. So if you're new in here, this is new for you, but I'll show you. So I'll show you this with these graphics. This is a sentiment cycle of a normal bear market. Like I said, there's a lot of money to be made in the bear market on the long side. Don't get discouraged and think you can't. But usually you have this. Yeah, everybody buying on the way down. They get smoked. Then here they're buying on the way down thinking they're done. Then you get the panic and then the futz around. Now contrast that to now. Does this look familiar? Sure does to me. Almost exact. There's that, the first waft down, the panic, and now we're probably going to futz around for a couple of weeks. The moral of the story, most bear markets end when everybody gives up. They stop buying on the way down, finally, and you develop an inverse head and shoulders. This kind of damage takes a long time to repair. So it doesn't mean you can't make money on the long side. It's just a new bull market starts on an inverse head and shoulders most of the time, or at least a defined trend line. We don't have that. I watch more people want to buy Alibaba on the way down. Buy calls in Alibaba, it's going up. Well, every call you would have bought, you lost money. It has too much damage. You need to see the momentum start to turn and a defined trend line. That's what you're looking for. Do you have that now? No. Is there, they do AI, they do all that. I don't care. I care about the momentum lifting and going back up. Or you could do it this way. You can be mechanical and at least buy if it gets over the ATR trailing stop. I mean, at least when you're wrong, you're going to lose very little. So I just can't stress that enough. So now I want to show you something else. I don't know if Penn's in here, but just so you know, when we're watching this, we're watching that usually Good Friday, the day before Good Friday goes up. Right now it's acting like putrid. So you got on the one side, you think the tape bombs with Trump. He came out before the opening talking about, it's going well with Japan. On the other hand, you have Powell sounding horrible. So what happens? Usually by the end of the day, we've been rallying because people think something's going to come out overnight, which is exactly what happened yesterday on the close. So on the close yesterday, you got, where is it? You got that little rally. People get worried that something's coming out. It's just that's not a one-off. It happens a lot in this kind of environment. Longer term, I think we go lower. Shorter term, I think we're going to futz around in this area. If I'm right, you're going to do this. Just like that. And then roll over. That could take months. So I'm going to show you a couple of graphics of at least how I'm doing it on how I've been showing all our subscribers. So number one, I want to go and do something. We're short gold. We were wrong the first time, we're right the second time. So why are we doing gold? This is where it gets dangerous because you're betting that it's going to revert back to some moving averages. Gold has a habit of futzing around and coming back to some moving average, whether it's the 20, which is that. Almost every rally, it's come back to the moving average. Look at that. Even the parabolic moves, it's come back to the moving average. That's what we were playing. The first one gapped on us, we were wrong. Usually when you do this, you got to wait for the reversal candle. We were impatient. Well, actually, we did have one. It just didn't work. That happens. That's why we bought a cheap one we lost in. We're in another one you saw we made 10 to 20%. So we're in gold. We sold half. We sold half our position, so our average cost is down. Money management is really important. So that's number one. Number two, what do you do with the QQQ that's acting so poorly? I don't think a lot. You're overbought in a downtrend. That's usually a sell signal. Also, the candle is lower than the previous days. So that's actually, usually a sell signal. You're overbought in a downtrend with a follow-through candle, but usually after a washout, they're not as reliable. You usually get a futz around for weeks. And that's what you get. I'll show you some examples. So first, I'm going to go to 1980. So how many in here have seen my stock twits obsession with 1980 in the election? I hope you've seen all the posts because so far they've worked. So what are we talking about? Well, we'll take it with TradingView. So we'll go back to TradingView. We're going to take a daily chart. Now, why am I talking about 1980? Because Reaganomics was supposed to be like Trumponomics. So lack of regulation, tax relief, all that stuff. But the problem was there are too many negative variables, and there were back then too. So let's go back, way back, like Chris Berman says in the Home Run Derby. We're going to show you 1980 again if you haven't been looking. So what happened in 1980? You got the election euphoria, Reagan winning, the test of the gap, which is happened, a rally into the inauguration, which is what happened. And then look at that. And this is where we are now. It's a little more fast forward. 18-month bear market. This, the big down. It took months for it to have its next leg down. Months. How did it end? August 82. I was on the floor. I was a clerk. Defined trend line breakout. Look at that. 18 months it took to develop that after all this damage. In fact, both of these panics, actually three of them, all of these panics, what happened? You then tested the low. It just took months because these never broke up. So I'm just telling you, it's a big deal. So I think it's a big deal. The other thing is, believe it or not, take back here. And I bet that on a 200, it was starting to flatten out. Yeah, it was starting to flatten out. Why was it flattening out? Because these bars were not that much lower than 200 previous. So that's what happened. So what happened now? Well, we'll go into now and I'll show you. Like I said, these were all shown before it happened. So you got the election euphoria. You got the fill of the gap. You had the rally into the inauguration. And then you get the crap out. Very similar. very similar, and you still don't have a defined trend line. So that's what I wanted to show you. Now, there are some variables that might make the markets hold up for now. So these have been posted on StockTwits and in multiple rooms. What are we talking about? Buybacks. So this is another art like and not a science like the ATR trailing stop. So what are we talking about? Companies in the S&P voluntarily don't buy back stock 5 weeks prior to earnings. Voluntarily. They can't buy back stock the last 10 minutes or the opening print. So this is Rule 10b-18. So usually they voluntarily don't buy back stock. Now, when did the secular bull market start? Secular bull market, 1982. When were companies allowed by the SEC to start buying back stock? Bless its heart, 1982. Believe it or not. Now, why am I bringing that up? Because you've just started to see the earnings reports, the UALs, the one of the housing stocks, D.R. Horton. You've had JP Morgan, Goldman Sachs. But usually I go by Apple. And Apple is the end of the month. They're one of the later reporting. I know NVIDIA is, but that's not the preponderance. So the preponderance of the buyback blackout is from the end of this month. Well, really about April 25th. And when did the buyback blackout start? Well, figure when JP Morgan, April 11th, and go back 35 days. So that's the beginning of March. So what happened the beginning of March? You went straight down in the markets. Buyback blackout does not mean you're going down. Just like when resumption of buybacks doesn't mean you're going up. What it means is bad news is more likely to hit a stock when they can't buy back stock. A bad chart is more likely to hit the stock. A bad market is, if there's bad news, it's more likely to tank the markets. So this would go on what I'm talking about. We're going to take off the MACD on the bottom. In fact, we could take off everything. And I want to show you a cycle chart. And I'm not going blindly on cycles like Arch Crawford with lunar cycles and all that stuff. All we're doing is you're going to see that a lot of the bottoms were when there was a resumption in buybacks. Middle of April, companies can start that day. So, resumption of buybacks. Resumption of buybacks. So, all you do is I'm taking a cycle. So, let's take a cycle. So, we'll make it easy. We're going to take the middle of this April. And all we're going to do is take the next cycle. That would be the end of August. Look at that. So I'm going to make that nice and big. And I'm going to make it blue. That's my favorite color. We're going to make it nice and thick. There. So you're going to see that it corresponds to when buybacks start. It's amazing. So that's what we're watching. So in here, remember, buybacks don't make a stock go up. Lack of buybacks, if there's bad news, are more likely to tank a stock or a bad chart. Now, why am I showing this chart? Well, you'll see that it's been pretty darn reliable. Not perfect. In fact, this is skewed wrong. It should be right here. Middle of October. Apple reports here. This is when the preponderance buyback stock. So I can make that a little more accurate. So, where's April in here? So like I said, it should be right here. So let's delete this. I'm going to do a different one. We're going to take middle of April. Right here. I'm telling you, it works. So you can take Apple's usually August. So there, November, there. Yeah, there you go. Pretty good. Pretty good. Like I said, there's no magic bullet. So just because I'm showing this doesn't mean, oh, I'm going to make a lot of money trading. No, this is just one tool in the arsenal. But the reason I'm showing this in a lot of bear markets, like I'm telling you, you have a lot of work to be done on the downside. So if it futzes around, guess what? You're going to get into where a preponderance of stocks can buy back stock. And then you have your next leg down. I bet if you go way back in real bear markets, like here, see that? And it futzed around. So here they can buy back stock, and then it had another leg down. In real bear markets like 2008, it was probably the same thing. But, companies were preserving capital, so it was a little different. But if I'm right, you're going to get and this isn't perfect. Like I said, it's middle of April. But still, what happens? They're probably going to start buying back stock in here, which will keep the markets in this area until the next buyback blackout, which would be in here, beginning of June. Like I said, that doesn't mean you're going down. Heck, you went straight up here. It's bad news is more likely to tank the markets. That's all it's about. There was bad news here. It tanked the markets last July. So it just means that bad news is more likely to tank it. So it's all about probability. It's not a magic bullet. So that's how I look at it. I looked at you could go over here and you could say, yeah, well, they're, the midst of the buyback blackout. And like I said, I don't think I did that perfect. So you have to move it a little. But you're going to see that, yeah, then companies are going to jump on it. And if you think it doesn't happen, you can go into JP Morgan and see when their earnings are. And guess what? Yeah, heck yeah, you could put in to see if it works. It's not perfect. Go and put in buyback blackout. Just go into here. Go into when the earnings are. That's usually when the bottom is. Does it work? It sure looks like it worked pretty well. But like I said, it's not that it has to go down or up. It's that bad news is more likely to tank it. That's all it means. Bad news is more likely to tank it. As you see, overall, that's worked. It even worked here lately. How's it acted after earnings? It's holding up. Yeah, it's amazing how that works. You can go way back. You're going to see it works. So you're going to see it. I'll put it like this. There, straight down before earnings. Futzed around before earnings. Straight down before earnings. Futzed around before earnings. Sold off before earnings. Do you see a trend here? That's why we played butterflies under the market in JP Morgan. Because it worked. Because you also combine charts, but you're combining the lack of buybacks. So I find that, I'm partial, but I find it fascinating. Let me check. And like I said, this isn't a magic bullet, but I'm happy to share it. There. Happy to share it. So interest rates were 20%. Yeah, it did matter in 80. There's always something reason. But the point was there was excitement about lack of regulation in 80. This time, that excitement went away with the tariffs. So, but yeah, there's always a reason. So the reason was different, but the result was the same. And also, in the grand scheme of things, the bond market is in the midst of a horrible sell-off. Sound familiar like 1980? Yeah, I don't think everybody realizes the bonds have sold off 70 points. So you have had a big sell-off prior to the election. So how about the bond market back then? Well, it's hard to see it because the ETFs don't go back that far. But same thing, a rock of the bond market prior to the election. It's usually a delayed reaction. So, and what does that mean? It's just like buybacks, probability. If interest rates are real high, there are other places to put your money, which means bad news is more likely to affect the markets poorly, which is what's happening. So in there, that's what I see. So next thing I want to show you is Trader Savvy Intraday. So we do a lot of research. Well, I do, and I try to share it all. So we made money in Netflix today. How do we make money? I'll show you. Netflix has a habit of reverting to unchanged the day of earnings. Traders flattening before the close. Like I said, it's not a magic bullet. And it doesn't mean it's going to close unchanged. It means it goes to unchanged. So when it opened here, it went unchanged. When it got too far oversold, it went unchanged. It went up, it went unchanged. So where'd we short it? Well, let me put it this way. I'm going to take a naked chart here. And where do you think we shorted it? Netflix today? Like I said, you have to combine with many indicators. Well, let me show you. Give me 1 second. So where do you think we shorted Netflix? Like I said, you're combining things. There isn't a magic bullet. I'll show you. Where did we short Netflix? Remember, you're going for the unchanged. We shorted Netflix here. Right there. The cross of the ATR trailing stop, and at this far over the unchanged. So we bought it too early. We made 2.5 points. Didn't play it to unchanged, unfortunately. Not caring about the moving averages. I'm telling you, in the long run, I wouldn't watch the moving averages in a downtrend. In an uptrend, a lot of times they do this. In the moving averages, they revert to them, and then you look for the positive reversal candle on the way up. No doubt, but we buy on the way up. And I'm telling you right now, only looking at buying things is not the way to go. You got to know how to buy and to sell. So if you can only buy, then you got to wait for the correct trigger. I mean, if you're buying Netflix, there's a trigger. There's a bull flag. This is where we shorted it, on the little bear flag under the ATR trailing stop. Now, too late. Now you don't know. But let's go back to the last earnings. This is how we did it. So we did it this way. Now, I want to go over a number of other things, but I'll show you. We're going to go on demand, the rewind function of Thinkorswim. We're going to go to the day of the earnings. The day of the earnings. And what are you noticing? Well, I don't know about you, but this looks pretty darn similar, doesn't it? Got up, went unchanged, got overshot to the downside and rallied. Under the ATR trailing stop, went back to unchanged. Now now look at this here. And look at this here. You got this, and you got this. Now we're in this move where it's going slowly up. What happened in January? Well, I'm not showing you the second part. You see how it went slowly up? What happened by the end of the day? Let's see. Well, it's still up. Is there any sell signal? No. It's getting there. Still not a defined trend line until there. One of the biggest mistakes traders make is drawing too many trend lines. That's too steep. This is too steep. Even though it worked, we use the ATR trailing stop. But now let's see what happens. Well, guess what? It went almost unchanged. What did it do by the very close? Nothing. You're playing to unchanged. Now, if you're playing this, you don't wait till unchanged. You wait till the chart tells you to get out. That sure looks like an inverse head and shoulders to me. You're out right here. You're out with the ATR trailing stop cross. So now what's it telling you? Well, believe it or not, it's trying to do the same thing as last time. Define trend line. Look at that. Look at all the points of contact. How about the ATR trailing stop? It's getting under it. The problem is stocks acted great today. So, I mean, I totally understand that. But I'm just showing you on what I'm watching in here. If it doesn't hold here, I think you see it back to unchanged, especially with the overall market acting terrible. So just thought I'd show you that. Now, there is another thing with the broad market. We're calling it the Marjorie Taylor Greene bottom. Now, it's not just her. I'm not picking on her. I'm talking about the Congress people. And the Congress people were loading up on April 7th and April 8th, right before Trump eased up on the tariffs. Yeah, somebody was tipped off. So I'm telling you right now that all congressmen, also Bill Ackman, a lot of billionaires were tipped off as well. There's no way the administration is going to let them be underwater. So to me, that 5,100 is big support. Every time it gets to 5,100 or close to it, you're going to see a positive headline. That's just the way it's acting. That's where all the Congress people bought. He is not going to let them be underwater. That's the way I look at it. So, that's why in this area, you're looking for a positive reversal candle. So I'm just telling you that politics does make a difference. Fundamental can make a difference. And here's another one. Let me give you another, for instance, about fundamental. So right now, I mean, they're already downgrading their earnings, like NVIDIA said, with a big charge off. 270 was the SPX expectation. Was. 20 PE gets you to 5,400. Well, we're almost there. And 20 PE historically is pretty high. But fine, 5,400. The problem is with the tariffs, a lot of people are lowering it to 250. So 20 PE is 5,000. So I'm just telling you that up at this 5,600, if you fill those gaps, do the calculation. Remember, even if they ease off of China, you still have a 10% tariff. It's still going to hurt S&P earnings, and the PE is going to be high. Take 250 times 22. That gets you to 5,500, and 22 is huge. So I'm telling you, 5,500 and still 10% tariffs is the area where we're looking for swing shorts. In here, I'm not sure because you have that support, the Congress support, but you had the PE resistance. So that's where you are. So in this area, one of the mistakes I've seen is going and doing something neutral now. You don't want to do neutral now. You want to do neutral or under the market at extremes. In this area, I'm not touching it. And as you see, what just happened? Did that just come out, Jack? Oh, this is another thing. With everybody that has Thinkorswim on the bottom, add a gadget to switch your gadget. See, switch gadget. Go to live news and put SPY. SPY has most of the good headlines. Trump pressures Fed. Treasury Secretary has cautioned the White House. Any attempt to fire Powell would risk destabilizing the markets. Just keep that in the back of your mind, all this stuff. So I would put up SPY. There are a lot of headlines coming out, and I found that a lot of them are under SPY. Very handy. So that's what I'm watching. It's very handy to have that. And this goes right now into the thing of the markets futzing around for weeks. I mean, I don't know about you. They sure seem to be futzing around to me. The second they look bad, there's a positive tweet. Like I said, where did the Congress people buy? They bought on April 8th. What happens when it's approaching April 8th? There's a positive tweet. And it's not a coincidence. We're in a very manipulated market right now. So, but for me, when I want to do a swing short, it's going to be after you factor in positive tariff news and it bumps up against S&P PE resistance, which means at the moment it's a push. You have some positive news, some negative news. So that's where I am right now. Historically, today you go up. There are a lot of comments coming out. Like I said, there's a lot of things that behoove positive headlines. So I would not short in here. And there's another thing, another kicker. What's going up right now? Apple. Why on earth is Apple going up now? Because the people think there's going to be some positive news. Last time Apple went up at the end of the day, it gapped up $10 the next day. You don't think traders are seeing that? Yeah, they're seeing that. So I am not playing the short side today. Now, obviously, if he fires Powell, that's one thing. But I'm telling you right now, the Congress people and the Ackmans of the world need to be rewarded. So that's where I am right now. That historically you go up. And like I said, I don't see the reason to be bearish in here. There are too many positive tweets. So I'm telling you, you're going to have positive tweets. The Ackman influence. So that's where we are right now. Now, I will tell you a couple of things I'll watch as tells. Number one, the Russell. Believe it or not, the Russell is finally outperforming like I predicted. And the reason is, let me take it with TradingView. Because last time I watched this, the deal is that the Russell is so underperforming on a weekly or a monthly chart. Let's put it over here. That's your Russell at a 2-year low. The ES on a 2-year low, it's not even close. That's your 2-year low. So a lot of times what happens is the Russell is going to outperform and the ES is going to have a mind of its own. If you take the daily chart, the Russell's held up. This actually got down to here. So that's where I am. So at the moment, not doing a lot. I'm watching the Russell act well, the internals act well. Historically, you go up today, you have positive tweets. So I am just backing away. So we're still in a gold something and we're in data dog. We're in nothing else. Now, I will tell you, everybody and their mother thinks we're going to rally on the close because of historical stuff and tweets and all that. When do I get where I want to do a swing short? Well, probably in this gap. So I'm going to take this and I'm happy to share this. I can't share it in the other room. I can't put in images. This is what I'm looking for. You can put the QQQ up here. You can put the SPX, non-24-hour suckers. You can take off the moving averages. And by the way, and that's something I'm going to go over the last thing. Do not trust this death cross crap. Most death crosses correspond, when the 50 crosses the 200, most correspond to a bottom, not a top. They go down eventually, but the first move is up, not down on a death cross. Don't believe that stuff. Another thing, don't believe a magic bullet, like I've warned. Now, getting back to it. Where do I think markets could go? Well, I think they could fill this gap and maybe up here. Like I said, that would bump against valuation. These are your gaps right there and right here. That's what I'm going to be watching. I'm going to be watching the gaps. Second thing, I would be watching the option activity in the stocks that are benefited by if policy changes. Apple acted like dirt this morning and now refuses to go lower. Wow, that's a surprise. I bet you there are a boatload of out of the money calls trading for next week. Well, let's look. Now, keep in mind, if it's up, you should have more calls and puts. But let's look anyway. No, not really. You got 12,000 and 10,000. You got, well, yeah, 9,000, 10,000, 10,000, 11,000, 13,000. Yeah, you are getting a lot. How about for the include earnings? Not many. So they're thinking something next week. But like I said, with the stock up, you should have more options, more calls and puts. I'm not touching Apple, but we've been using it all day as a tell. Every day the tells change. 2 days ago, dollar didn't matter. Bonds didn't matter. The tech stocks were acting terrible, and that's what mattered. So every day the conditions change. Like I said, there's no magic bullet. It's not like, oh, the Russell's going up, so the markets have to go crazy. Russell went up 2 days ago and the NASDAQ got smoked. So I'm just telling you, there are a lot of different things to concentrate on. So today, Russell's acting fine. So at the moment, I don't see the reason to go short whatsoever. No idea. For Monday, well, let's go over it. SPX. Like I said, I like the MACD with Thinkorswim better than TradingView. Hourly, you see the gaps now. There's your gaps. There's your resistance. This was the Powell sell-off. You had a little head and shoulders consolidation and it broke. That's the stuck zone where everybody got stuck. We're sticking there now. Over that, sure, 5,400. Then I'll look to do something under the market. So, but that's what I'm going to be watching. So you're not overbought on an hourly, but I like using the actual futures. Not even close to overbought on an hourly. How about a 15? And you see that the resistance. 15-minute. It's getting overbought. But I don't see the reason to play anything to the downside at the moment. So I'm not. So that's where I am right now. Transport's acting better. They acted terrible yesterday. Dow's down, led by United Health. And to be honest, that's not a bad sell-off considering one of the components is down over 100. So not bad. So the way I'm looking at it, I'm not doing much in here. I will look for defined patterns to screw around. And that's how I'm going to trade. So everybody take care. Thanks for listening. Chart Patterns Mastery. I'll be sharing the screens again soon.